Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everyone. Welcome back to another live stream and another week in markets. I hope you're doing well. I hope you're staying safe, and I hope you had a nice weekend. Stocks are higher. Indices continued their pump here off of some good news. Some kind of expected, but still good news, which is it looks to be that we've got the big deal on the table. The European Union, the US, this trade deal, this was sort of the last domino to fall. And it puts us into this weird situation. A lot of people who have been looking at this market skeptically, I don't know if that's a word, cautiously, uncertain, a big question for a lot of people is, or has been, all these trade scares that we've been seeing, really people were worried that maybe something would fall apart with specifically like Europe and the US. But what's been really interesting is that pretty much everything has mostly gone okay in the eyes of the stock market. I mean, I would not have guessed that it would have fallen the way it did. Not fallen price-wise, but how things would have played out. We got trade deals like all over the place. Japan, China seems to be on the cards. EU, India, Canada's still a question. But the thing is, Aaron says the US won again this time. We're the US's little baby again. It does seem to be in some ways a US victory, but in some ways it's a global victory. Because if you look at, like, for example, the DAX, right? The DAX year to date has done better than the S&P 500. Look at this. The Nikkei is pulling back a little bit. This is interesting to see. Of course, why is the Nikkei pulling back today? Does anybody want to guess why that might be, or one of the contributing reasons? This is an advanced tariff question. Here is your hint. It involves trade stuff. Why is the Nikkei down? And was there something from the central bank? Let me actually clarify that. Did we get did we get something on? I don't think we did. I could be wrong. Anybody know? Here's the thing. Part of the reason I would argue for the Nikkei being down is for the same reason it shot higher. When the US and Japan had their kind of shaking of the hands, right? That made Europe look bad, right? It made things look like, okay, Japan's going to get the better deal, and they're the, competitors of Europe in terms of auto sales to the US. Now that it looks like a deal is happening for EU, right? That edge may be pulled out to an extent on Japanese automobiles being sold to the US. So that's kind of why I think you're seeing a little bit of a pullback here, right? So what was like a huge advantage for Japan became not as much of an advantage for Japan. Still good. I still think, both indices, the Nikkei, the DAX, the US indices, I think they can all continue to move higher on a bigger picture note. But I thought that was an interesting kind of movement in the Nikkei today, a down move in response to potentially losing that, overt edge that they had over Europe, European car sales to the US. So just thought that was an interesting factor to think about today. The dollar index is up today. Of course, this is really interesting because you're getting multiple facets here. You're getting the euro moving lower, sharply lower today, down 0.7%. That is a good move on the euro. Take a look at the 15-minute chart. You can see we're moving with some momentum on the lower time frames. British pound pretty much flat on the day, but I thought this was interesting. The dollar gaining a lot of strength on this because, again, as Aaron put earlier, this is a bit of a victory for the US, where it's like, okay, US has maintained its role as the centerpiece to global trade. They never were not the centerpiece of global trade. They definitely still are. But look at oil today. Oil's shooting higher, right? This is telling you that people are like, okay, we've got a situation in which the dollar is reigniting strength. Oil is also moving higher. Perhaps this is a little bit of a US is okay situation. I'm curious. Yep. Well, let me see. What about TLT? Okay, TLT is a little bit lower today. Yields are a little higher, but not too much changed. So again, I think what this does, right, is you have all these countries that are signing deals with the US. They're saying, you know, shares of a Japanese semiconductor equipment maker plunged in early trade, maybe why the Nikkei sold. Possibly a part of it. I think a big part of it, though, like I said, Lee, I think a big part of it is, a huge component of the Japanese economy is selling like automobiles to the US. And so when they had the special deal with the US last week, right, that probably looked really good for them. And then when Europe now has potential deals on the table, actually I haven't looked hardcore at what the EU-US trade deal, like what's the interesting. There's some negative responses to this. This might be why the euro is down sizably against the US. Europe balks at unbalanced US trade deal. Let's just take a look at this. Let's just see. US and EU have announced a framework trade deal and solidified a template for higher levies for American trading partners, imposing a 15% tariff on most EU imports. 15%. I mean, the market can handle 15%. That's not going to kill anybody. 15% appears to be the new normal, with much higher price, higher than pre-Trump levels, around 4.8% on average. Yeah, very interesting. Crucially, the agreement doesn't address President Trump's core complaints, including European digital taxes on tech giants and other non-tariff barriers. We have a deal. Interesting. Interesting. What we know and what we don't know about the EU deal. The agreement calls for a 15% tariff on many European exports to the US, including autos. Okay, so that to me is a similar deal to what Japan has with the US. So maybe that's why, again, Nikkei kind of losing their edge on that. The bloc agreed to buy $750 billion worth of American energy and increase investment in the US by more than $600 billion, as well as buy vast amounts of military equipment. Is Lockheed Martin up today? Not really. Okay. There will be zero tariffs on a range of American exports, including aircraft, certain chemicals, and select generic drugs. Okay. I mean, long story short, big picture is that the US, EU seem to be shaking hands on deals. And to me, that was, as I said, the top of the stream. It's kind of the last domino in some ways. Like we have US and China circling a deal, EU and US circling a deal, Japan, UK. We don't have, if you're like super bearish on the indices, I think what the bears are resorting to right now is saying that the market is expensive. which is never a really good, it's not a very reliably good predictor of forward movements in the market when the market is expensive. And what I'm talking about is the market relative to its earnings, right? The stock market. Believe it or not, it can look really expensive and then just get way more expensive before it eventually, sells off. Stocks always eventually have some sort of dumpage for some reason, right? Some big sell off for some reason. But rarely is it just the market just says, oh yeah, no, we're overpriced, and so we're going to sell off. So I think that's why if you're looking at indices, why they keep melting higher or just kind of trending slowly higher. It's because you're in a low volatility environment. All the worries about, trade war, massive inflation, all this stuff, they're not showing up. It looks pretty good out there. We got trade deals happening. We got, the US is going to be taking in income from this. Again, you have to look at what's happening in front of you and say, look, other countries seem to be coming to the table. Deals are happening. If you're just going to be bearish just because you're bearish, be very careful with that. Now, let me be very fair to this. Am I out there buying stocks at this level? Nope. I have to wait for pullbacks. I have to be, but there's a possibility here that it may have all just been, or not may have all just been, but we may now see, now that we've had, such a push higher, a natural corrective pullback. Now that the news is out, we don't have something big to look forward to, right? Where if you have, something ahead of us that's very promising, maybe the market can keep grinding higher. I would not be surprised if trade deals and all those worries have been now kind of out of the market, right? All those worries that we saw have now kind of not materialized, and the market has seen a rally. But then what's going to bring us higher? That's the question. You have to think about this. When you're talking about indices, when everybody is optimistic, or at least in this case, the fear event has been ruled out for the most part, what's going to get us to rise higher? Well, we're going into earnings season. This week we get Apple, I believe, and we also get Microsoft, I believe. So you've got some big names reporting their earnings. That is going to be a potential catalyst if you get good earnings from companies. We saw Google smash their earnings expectations, which was great for the stock, right? I sold puts. I did an earnings play on that. Stock's a little bit higher here today. So these puts that I sold are pretty much worthless, which when you're shorting puts is a good thing. So I placed a trade on Google off of that. I will likely place some trades. Well, let me just really quick look at Microsoft. Microsoft's tricky. This stock is, in my opinion, it's a great stock, wonderful, wonderful company. Hard for me to justify buying it at these levels. Again, I like to buy stocks when they're beaten down. I don't really like to buy them when they're hitting fresh all-time highs kind of thing. Anyways, Dow Jones sitting here at the highs. Hey, Vanessa, good to see you. Hope you're doing well. What's up, Bashy? Everybody in the chat. We got Glenn in here. Good to see you too. Othmain. Everybody's here this morning. Happy Monday, guys. Yeah. So Tyrell says, new Edge Finder user here. I got a question regarding the sentiment data for top setups. When does the sentiment data refresh, weekly or daily? So that's a great question, Tyrell. So retail sentiment, these tools, let me show you. Let's go retail sentiment. So this updates every 30 minutes. However, for currencies, it's every 30 minutes. But I don't know why, but Looker Studio, if anybody has the Edge Finder, it's been giving me so many random issues this morning. I don't know why. But for indices and commodities, we actually use the options volume, which updates daily. Reason for that is that sentiment is much easier captured through options market volume when it comes to like the S&P 500 or the NASDAQ or gold than anything else. It's a daily thing we can look at. We can look at the options exchange. We could say, are people buying puts, meaning they're bearish, or are people buying calls, meaning they're bullish? We can look at that every day. And so it's a daily indicator for indices and commodities, and it is a 30-minute indicator for currencies. I hope that makes sense, and I hope that helps. Turtle traders bought specifically at 52-week highs. You're correct, Vishnu. But here's the thing: I'm not a turtle trader, and to each their own. Specifically, if you actually want to really dive into the turtle trader story, which was infamous in trading land, they did really well for a period of time. But that same strategy works well when it works well. It doesn't work well when it doesn't work well. Just like everything else, right? If you only look at a period where they do, where you have clean, straight up markets where they're breaking out very nicely or breaking down very nicely and following through, that strategy there's no better strategy. If you look at a market where it goes sideways or just doesn't follow through very much, that same strategy can perform poorly. Now, again, over the long term, it can perform great. But for me personally, I'm not sort of a buy the all-time highs type person. However, I'm also aware, if you guys haven't heard this before, indices, new all-time highs oftentimes produce very strong forward-looking average returns. So when you get a break to all-time highs, if you had just bought it after the new all-time high, a lot of times you do better than just, which is a crazy concept. It's a momentum strategy. Yeah. And so for me personally, for me, it's just, it's not necessarily that I think that this market's going to go down. In fact, again, I think path of least resistance for this market to keep going up. I'm bullish on indices. But for me to place a trade that makes good risk reward sense, I have to see some kind of a pullback. Now, with this market becoming, really stretched and valuations becoming very expensive on the markets, that can happen really quick. Like, everyone thinks that when the market's in grind mode, it's hard not to feel like, yeah, this thing's just going to keep doing this. Like, it's going to do it every day. In fact, I will never forget for the rest of my trading career that when we were over here, I'm not even kidding. Like, you could not pick a better example. I was on Twitter or X or whatever, and I saw somebody comment that basically their idea was that the NASDAQ only goes up, and that their strategy, I'm not even kidding, was they quoted something like this. I'm paraphrasing, but it was something along the lines of, right now, or my trading strategy is to wake up, buy the NASDAQ, and be done. And the thing is, when the markets are in risk on mode, there's no beating that. I mean, wake up, buy the markets, you're done. Heck yeah, that sounds really easy. But again, and that lit a debate, as it always does on Twitter. But the debate was lit of this idea of, hey, wake up, buy the NASDAQ, it's easy, and the market goes up every day, until it doesn't. And those same people who get accustomed to, buying calls in the morning and making money and buying the NASDAQ, buying the S&P, it only goes up, and that they get trained into thinking that it only goes up. When you look at this as your sample size, of course, you're going to come to the conclusion, I would never short, I would only buy every single day. But people who lived through 2022, or people who lived through, if you've been doing this for a long time, saw a little bit of a bear market in 2018. It was a modest or mild one. But really, the crucial examples are people who lived through, 15 years ago, who traded during that time, where you had the same story. Market just goes up all the time. It looks like a beast. .com days right before that. I mean, it's hard to deny, like, that looks like an easy thing to trade. You just buy it. Until those people wiped out and lost everything. And there were countless people who lost everything. I actually met someone who, to their credit, they're doing great now. But my dad and I went, and we stopped in this town one time. And there was a bar, and we sat down at the bar, and we just had a drink and hung out for a little bit. And we met the bar owner, and the bar owner said that he made like $1 million+ in the .com days. And remember, adjusted for inflation, that's like what, $2 million now? I don't know, but did really, really well. And I asked him, what did you do during that time? He's like, I just bought calls every day. He's like, I was just buying calls on high risk stocks, and I was making a killing. And then I asked him what happened. He said he blew all of it. He said he blew up when the market stopped going up. And that story it echoes through trading land. People who think they're geniuses in bull markets get crushed in bear ones. And vice versa. There's people who also, in a bear market, they make a ton of money shorting stocks thinking they're a genius. And then when the market rallies, they blow up. The point is, it's easy to think you are a genius in markets when something's going right. It's very hard to have great performance over large stretches of time in different market environments. Anyone can do really well if they just bought here and they've just been buying every day. You're going to look like a genius until you get another swath lower, which is going to humble the crap out of you, right? So I don't say that I'm not hoping for that for you, but I've been humbled, and everybody in this room who has traded for a substantial period of time, if you're a profitable trader, or if you're just an experienced one still working towards profitability, you know as well as I do, the market humbles people who think they've got it all figured out. Look, I've been doing this for a long time. I don't have it all figured out. So what do I do? What do I do? Why should I even be swimming in these shark-infested waters? Well, the way to approach markets, the thing I always come back to, the core to my trading success that I've had in my personal journey, is reducing your risk, reducing your trade size. It's critical because no one knows. You may be hot right now. You may be struggling through a drawdown right now. Market environments change. And so what may be working and you feel like a genius, don't let that cause you to blow up. Learn from people who share those stories. From my experience, from people who have blown up. Learn from their experience, or you are doomed to learn it for yourself. If you're really smart, someone who's really smart, and I've tried to employ this in my own life, it's easier said than done. Really smart people learn from the experiences of others so that they don't have to go through the catastrophic experience themselves, right? In trading land, if you're risking big or you feel like you've got some system that's just killing the markets, trust me, if it seems too good to be true in markets, you know the saying. Humbles you like nobody's business. Yep. I'm telling you, man, don't let it be you. If you're here and you're like, well, I haven't really blown up and I'm doing pretty well, then don't blow up. Just reduce your position size and be okay with the idea that I'm going to have tough times in trading. But tough times are survivable if your trade size is small. Tough times are going to blow you up if your trade size is big. Guaranteed, 100%. No one in this room who trades with, if you're risking 10% per trade, I guarantee you with time, you will blow your account. Guaranteed. The math doesn't make sense. Nothing works all the time in markets. Once you hit a bump in the road, if you're risking too big, you're going to blow up every dollar in your account. Too many people in here have experienced what I'm talking about. They know what I'm saying. Learn from us who have made those mistakes. Don't make them yourself. Risk small. It's the only way to survive. I say it every single day because I know that if I can get someone to resonate with me on that, they're going to probably save themselves a lot of money. Or learn the hard way. That's your choices. Learn from people who have done it and gone through it, or learn it for yourself painfully. So back to the indices for just a second. I've learned from my own experience, right, that chasing a market that looks like this can be very painful. Granted, I could buy this right now, and I think the probability of it going higher is actually better than it going lower. But the risk to reward profile on that just doesn't really make sense for me because I don't really have, I guess you do have like some support here. You have some soft support around this area, around 22,750. Why do I call it soft support? Well, because it's been so long since we've had a good, clean flush to the downside that I think any sort of hiccup with a market that is expensive, not just in the price, but rather the price relative to earnings. I think this index as a whole is pretty expensive. I think we could get a very, very clean, quick flush to levels like 22,000, at which point I think the risk reward becomes a lot more attractive. So you give me something like this, then I'm probably going to probably take that trade. I'm going to probably look for an opportunity to do so. That would be a nice pullback. I think that's probably, what is that, a 50% retracement from this kind of lower leg? No, it's actually 61.8% retracement. So somewhere in this area looks a lot more clean to me. but that's a ways away. So that's really not on the watch list this week. So indices, at least the NASDAQ, not really meeting that criteria. S&P 500, you've got some support here around 6,200. That was a base for us. Dow Jones is sitting at resistance. This one could be potentially a breakout retest opportunity. So I'll keep my eye on that one. What's your oil trade looking like, Nick? Oh, give me a chance to brag about my oil trade. Why don't you? I've got my oil trade. It's still holding support. I am looking for a bigger move on this one. This is not a huge trade for me in terms of size, but the potential is here for what I think could be a nice push higher. I do think you have, let me show you something that I like on oil, which is actually, if I go to my economic surprise meter, I'm sorry, guys, the Edge Finder it's not Edge Finder. It's actually Google's software is having some issues this morning because it's across all of our different dashboards. So I'm not gonna be able to show you this. I'm not sure why it's being so buggy today. Stuff's just not loading properly. But I'm sure Google is working on it and they'll get it sorted out shortly. But it's not our data. It's Looker Studio, which is the software it's built in. Anyways, last time I looked at this, the economic surprise score for the Edge Finder across most economies, we have been seeing some strong data here relative to forecasts. And I think that strength in economic data could lead to oil prices moving higher based on demand, right? If economies are looking strong, demand could remain strong. That could be a upward pressure for the price of oil. I think that we dropped hard on oil because the ceasefire, the supply side of oil was reassured a little bit. When I say supply side, remember that when wars break out or things threaten the supply of oil, the price tends to go up. Because again, if there's less supply due to sanctions or refusal to trade or things like that, right? Or wartime demand for oil, all those things can cause prices to go up. So when we had the ceasefire, it's the opposite effect. It moved lower. And so now I'm not necessarily making a bet that I think some sort of wartime activity is going to take place. I just think that the economies of the world have been holding up better than expected. We've got trade deals around. I think that that's a supportive thing for the price action of oil. We also have a nice pullback to a key level of support that held really nicely here. I'd like to see a bigger break out of this consolidation. And if I can get that, that is going to be an opportunity for me to trail my stop loss into profit and see what I can do with a potential oil move. It's too soon to call. I haven't, I'm just waiting to see if we can break out higher on oil. If so, maybe there's some day trades on that one to look at. But for me, I'm more of a swing trader. Oil looks good this morning. Let's see if we can get some follow through. 1 hour chart, for example, tapping into some resistance. But if we can break through this, next stop to me would be a move up to like 68.40 on WTI. So we'll see. Dollar index also looks strong here this morning. I've been mentioning this. I actually talked about this on my Sunday video. I'm actually looking for some dollar reversals on a higher time frame basis. I'm looking for some dollar bullishness. We've been in a downtrend for quite some time. Actually, I'm bummed out that the Edge Finder's having issues this morning because I'd like to look at the COT data. We can try it. We'll give it a 50-50 shot that we can see some data. Nope. Yeah, Google's got some issues this morning. Usually this stuff resolves pretty quickly. Usually like they're doing some kind of update or some sort of thing, and then there's a brief period where the Edge Finder, because of Google stuff, slows down for a little bit and then it comes back. So apologies for any delays on that. I'm sure Google will have it sorted for us soon. Quiet Minute says it works for me. Awesome. I'll try refreshing it. Sometimes that sorts it out. But the big picture for me on the dollar is we've had some good economic data. And if you have the Edge Finder, the US economic heat map tilted in favor of the dollar for the first time in a while. And I actually look at that and I'm saying, okay, that may be strong for the US dollar. That may be weak for gold, strong for oil, right? But what I'd be looking for on the dollar index level would be a break of this 99 level. I think that's a pretty nice launch pad, if you will, for the dollar index. Let me take a look, see if that worked. Okay, we got some data. We're still spotty. We'll take it. Gold is still a very bullish rated thing in terms of institutional positioning. The dollar is still, it's pretty mixed. It's not particularly bullish or bearish. But specifically, what I'm looking for on the dollar index, like I said, break of a 99 level would be big. That'd be very bearish for gold. So it's possible that I get stopped out for a profit on this. I did trail my stop on gold. It's been super choppy. I've been mentioning that I've just been kind of like whatever with the price action for a little bit here on gold. And I just think there's better things to trade at this time. If we hold support, I'll stay in the trade. But if we break down and can't hold here, I will be taking a small profit and moving on from the gold trade onto greener pastures. VIX is up a little bit this morning, not very much. Bitcoin just consolidating here towards the highs. Ethereum also pretty close to not all-time highs, but to its recent highs. Yield slightly higher. Do we have another? We have another guest coming on today. We're supposed to have Ivan, but no Ivan just yet. We miss him. We miss Ivan. I haven't seen him in a minute. What about stocks, Nick? Trader Anthony, I'm going to stick to stocks on my other channel. If you are interested in stocks, find me on Trader Nick-stocks. I will be posting all sorts of stuff over there specific to stocks, but on this main channel, I don't want to alienate, the majority of my viewers here, which are more interested in, gold, currencies, and indices. That typically is more favorable around here. So if you're interested in stocks, find me on my second channel, Trader Nick Stocks. Okay, all good. Yeah, I'm going to cut the stream there. We're restructuring some things at A1. We no longer have Chris doing the streams. His schedule got too busy with some other stuff. However, at the same time, we do have some new content that we're working out and some exciting new stuff. I don't know if you guys saw this, but let me see. If you're a member in the VIP group, check this out. You ready? Ta-da! We are bringing on the one and only Marco, who you guys probably know from the live stream. If you're a regular stream viewer, you know Marco. He is joining us behind the scenes at the A1 Trading team level as a lead trader within our VIP group. So yes, his trades will be shared inside of the VIP service starting, I believe, next week is what we're going to do. It's really exciting. You guys know, if you are a big follower of the show, Marco he's a track recorded trader, verified trader. He's got plenty of years of experience, one of the most down-to-earth content creators in the space that I've come across. I've really enjoyed working with him just on the streams. We've collabed many different times, and I'm really excited to have him now joining us in terms of a thought leader, a lead trader at A1 Trading. So that puts us at, we have Chris Pulver, we have Marco, and we have Ivan. So very exciting. And also just an announcement in terms of Alan, as people have been asked about Alan too. He actually took a job at Oanda, which is very cool and very exciting for him. But due to that new role, there are some limitations compliance-wise. Many big brokerages have, they have rightfully so some restrictions on what their employees can kind of publish. And so that kind of put a gray area for us. So we are putting that on pause. Alan is definitely still behind the scenes, a contributor to what we do at A1 Trading, and a friend of mine at this point. We actually met in person. So while he will be taking a step back from leading in our group, we have got Marco in the meantime, and I'm sure Alan will make a resurface, make a reappearance at some point here, either in content. Well, we know he's going to be doing some content too. So a little bit of a team. We're switching things around at A1, and I think it's going to come out better than ever. So with that said, is another subscription for Marco needed? Nope. It is part of the membership. We are going to be, it is just a value add. We are trying to, in everything we do at A1, we try and make it better every single year. The VIP group, our partnership offers, like, for example, one of the things that we do behind the scenes at A1 that's pretty cool, and I would actually ask you guys to consider supporting us with this. It is free to you to try this out. Head over to our website. We've got a ton of stuff for you. Like, our goal at A1 Trading is to give as much as possible as we can to help traders out, because that is how we built our audience, and that is how we continuously build it bigger. So head over to a1trading.com. I want to show you something. If you are looking to get access to a better brokerage or access to a prop firm, we offer something kind of cool to the trading community on our website, which is we scout the best possible deals that we can with sponsors, and we ask them for big discounts. So for example, you get like 20% off prop firms, sign up bonuses or welcome bonuses with brokers that we've partnered. Brokers are all regulated. We only work with regulated brokerages. So again, if you want to explore our website, we also have free courses, completely free courses. You can also explore the Edge Finder. We have retail sentiment data available for free. We have some COT data available for free. Let me ask you guys to do me a big favor. A1trading.com. We already got it dropped in the chat. Thank you very much. Bookmark this page and use it as a way to help your trading career. We've got tons of perks on there available to you for free. So that's my request to you guys. If you want to support the stream in a free way, just head over to a1trading.com and explore what we have to offer there. Tons of free stuff to help you out. Thanks, guys. Have a great rest of your day, and we'll see you back on the next one.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.